Good morning. We can start the discussion. We're discussing about the central bank and particularly the Federal Reserve System. That's the US central bank that we were discussing in our last discussion. So we can start from where we stopped our discussion, and at the same time, I also shared the money supply process handout. Hopefully, you all have access for that handout too. So that also one of the very important areas. Hopefully, we'll be able to start towards latter part of our discussion today. So that being said, I'll see whether you all can see the screen, the handout that I have now shared with you all. So if you have any questions, as usual, if you have any questions, you can raise it, or you can share with me through the message or chat box, so I can quickly follow up while discussing the central banks. So we were comparing all the time with the circumstances or the Central Bank of Sri Lanka's structural arrangements in terms of our discussion. So we discussed up to the functions of Federal Reserve System. You already know more or less the key three components in the Federal Reserve System as the Board of Governors, Federal Open Market Committee, and then you have 12 central banks, or the Federal Reserve banks in US. So these are the main three components within the Federal Reserve System that we are discussing. In addition to that, you have Federal Advisory Council and member banks, they chip in. And then we also highlighted the fact that when it comes to Central Bank of Sri Lanka, we have the monetary board. Monetary board could be directly compared with Board of Governors. And then we also have monetary policy committee that can be inferred to FOMC, Federal Open Market Committee. But then even the Monetary Policy Committee's final recommendation would require the Monetary Board's concurrence, if not approval for implementation. And in that sense, the Monetary Board still remain the most important unit within the Central Bank of Sri Lanka. But then, of course, the FOMC in the case of US has its own powers and decision-making authority. Then we don't have separate regionally aligned central bank or the central banks in this country. And in US, of course, the country is big, diverse, and based on the fear of centralized power at the very inception of the central bank itself in US, they want the power being diffused along regional lines. So that's being factored in the setup of Federal Reserve banks in US. So they have established 12 Federal Reserve banks. Then you have the branches also operating. In the case of Sri Lanka, we don't have branches or different central banks. It is the regional offices of central bank, mainly concentrating on regional activities, peripheral activities, and awareness, public awareness kind of exercises. So you see the governors Board of Governors, you can compare with monetary board very much. And I was explaining the composition. So in line with the US Federal Reserve System in our last discussion. And then we looked at the separation in terms of the regional lines, and we explained the features involved there. And more or less, most of the Federal Reserve banks were concentrated towards east coast of US. That's simply because that's where the most of the economic activity is concentrated at the beginning of 20th century, in early 1900s. So you can see that with number of central bank concentrating towards the east coast, and of course the Europe is across the sea. But now, of course, you see not necessarily different, because the Asia, East Asia is highly becoming important in terms of global economic activities, and the emergence of IT, and of course globalized financial integration and things like that, helping existing arrangements to work irrespective of its location. So this been explained and highlighted in our last discussion. And then we talked about Federal Reserve banks, and then we came to the point where we were talking about the major functions that the Federal Reserve performs. Any questions before I get into real business in terms of today's discussion? And I hope that you are having, you can see slides that I'm sharing with you. So we looked at the overview of the Federal Reserve System, and then of course the three key system entities. You know that Board of Governors, Federal Reserve banks, and the Federal Open Market Committee. We discussed that too. And conducting monetary policy, that is a very, very important and the main function of central banks all around the world, right? So we will have a separate lecture for the monetary policy tools and monetary policy strategies. We will discuss there with greater details. But for the time being, take note that the FOMC sets the US monetary policy in accordance with its mandate. Okay, that's the legislative power given to Federal Reserve by the US Congress, as I said, to promote maximum employment. Maximum employment refers to US wanted to maintain at all times the full utilization of the resources available within US. So that to say that the unemployment in US to be maintained at the lowest possible levels. This is not to kind of conclude that unemployment needs to be zero. No. In any economy, at any given moment of time, there are certain type of elements that keeps people from not engaging in any employment. And there are people who are naturally not in a position to employ for reasons of health and other related consideration. There are also reasons of structural unemployment that depends on economy structural changes. So in the interim, there may be certain component. So having factored all this type of possibilities in any economy at any given moment of time, there is a natural rate of unemployment. So that is usually considered around 4%, not necessarily strictly 4%, but you generalize it around 4%. So to say that US unemployment to be around 4% or slightly higher than 4% is usually considered that US is fully employed. If not, even in other countries, the full employment exists if unemployment is closer to 4% line. So to say that all working age population has employment is one of the prime considerations, while they also look at stable prices. Stable prices is low and stable inflation. Okay, so you can't prescribe that inflation, no inflation means prices has to be same. No, not necessarily. Prices has to be same. Prices will be same for little duration and then adjust based on other developments. But what it means is stable. Prices has to be very much stable across a period, meaning to say low level of inflation is what it's been maintained, and moderate long-term interest rates in the US economy. The interest rates remain in today's context most important monetary policy tool. Most important monetary policy tool all the countries are trying to maneuver. Of course, some countries still maneuver the quantum of money, that is money supply, right? But interest rates being considered the more important variable in today's monetary policy conduct, and maneuvering of interest rates through various forms, including open market operations, requires to kind of bring in orderly interest rate structure in the economy. So the US also conduct monetary policy not only to promote maximum employment, stable prices, but also to maintain moderate long-term interest rates, not short-term interest rates. Short-term interest rates could be volatile for various reasons, but even the short-term interest rates, US must be at times hike interest rate. That means increase interest rates to fight future possible inflationary pressures. If not, US also hike interest rates to make sure asset allocation, asset distributions, or asset pricing in the economy, or bubbles that's been created in economies being orderly return to normal economic structure. So there may be circumstances US also keep interest rates high, right? Mostly the interest rates being kept high when you see inflation or inflation expectations are building up in the economies beyond the tolerable targeted levels that these countries looked at, right? So you see the conduct of monetary policy in this sense in the case of US, but at the same time, in the case of Central Bank of Sri Lanka, the main mandate given to the Central Bank of Sri Lanka in terms of monetary law act is economic and price stability. Economic stability and price stability. So the price stability is stable prices. That is to say, low and stable interest rates. So what was done for the last 151 months, Sri Lanka's inflation measured in terms of Colombo Consumer Price Index, CCPI, is in single digit, not cross double digit levels. If I'm not mistaken, it has crossed double digit levels. The most recent is somewhere in 2009. That's my recollection. Since then, it's been maintained in single-digit levels. Economic stability, economic and price stability. Economic stability means broad objectives in terms of maintaining stable economic environment. You would call growth, you would call employment, you would call other macroeconomic factors. So to say the stability in the economic front in the case of Sri Lanka. So the Monetary Law Act provides economic and price stability and financial system stability. Two main objectives: economic and price stability. Second one is financial system stability. That means the financial intermediation in the economy operates efficiently and promote financial intermediation across economic activities. That is the overarching objectives given to the Central Bank of Sri Lanka by the Monetary Law Act. But you can see here, in the case of US, they have the board objectives listed under conducting monetary policy, but at the same time, they also have, same as Sri Lanka, the promoting financial system stability. And then the fifth function, or the fourth function in the list here, that is number 5, supervising and regulating financial institutions and activities. And then they also have fostering payment and settlement system safety and efficiency. We'll come to these things, but looking at conducting monetary policy and promoting financial system stability, as far as the global central banking considerations being factored in, almost all the central banks in the world do this. Then the way in which that they promote this differs. For instance, in the case of Singapore, they probably keen on maintaining a low and stable price levels, but the way that they used to maintain it through the exchange rate related fronts, because for them the economy is mainly import export driven. Domestic production of related considerations is very challenging in the case of countries like Singapore. For that reason, they have this setup been established to prioritize external stability, right? So the similar way, some countries would only look at price stability, for instance, New Zealand, Ireland, but their focus is price stability. But then to achieve price stability, they engage in almost all the relevant activities that drive towards achieving the low and stable inflation levels. But then there were arguments after the financial crisis in 2008-9 that you being restricted only looking at price stability, you should have broader possibilities of engaging and supporting the economic activities at times of crisis, even pandemic period. So that itself facilitated with legislative empowerment in the case of US, in the case of Sri Lanka, in the case of India, because you have actually a broader spectrum in terms of achieving some of those objectives, simply because you have been given mandate through legislation with, in the case of US here, maximum employment, stable prices, moderate long term. It is very broad. And in the case of Sri Lanka, you see economic stability. price stability. So they have not taken out economic considerations, broad economic considerations. So it is something that, came into attention, especially during crisis times, for the central banks to look into. So that's the argument for and against having a broader multiple objectives versus more focused single objectives in some central banks. But single objectives in terms of achieving price stability, low and stable inflation levels, uh, 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 remains the priority anyway, even if you have multiple objectives in most of the cases. And promoting financial stability, financial system stability, very much in line with the monitoring of financial systems, financial markets. And they look at risks emanating in the financial system as a whole. And also in the case of US, they engage at home and abroad. And in countries like Sri Lanka, it's not necessarily abroad because our exposure, our financial systems exposure to rest of the world is very limited. If not, our own financial systems operating, financial intermediaries operating out of Sri Lanka is very limited, right? There are few banks operating in different destination. If not, what we have is foreign banks operating in Sri Lanka. So in the case of all these international banks that you are seeing is they are operating here, not necessarily our own banks going out and operating. Of course, there are few banks, I don't want to name them, they have operations, but very much limited to few locations and also serving our own clientele. But now it's changing with some expanded purposes to serve certain type of economic activities across the region. Some private banks, domestic private banks, have expanded into certain countries in the Asian region, and they are also looking at promoting some in some other parts of the world, right? So they look at financial system risk and engage at home and abroad to help ensure the system supports a healthy economy for US households, communities, and businesses. And effectively, they promote financial system stability to promote or support the healthy US economy and their stakeholders. They want to make sure US banks or US financial intermediaries operate elsewhere, fine, domestically and foreign, but still they're mindful of those agencies' health to make sure ultimate responsibilities, if not anything happens to those agencies operating elsewhere, would not necessarily challenge the US economic health, right? So various policies, various structures that they introduce to make sure that US banks operating in the rest of the world is actually functioning efficiently and bringing value to the US economy. And in the Sri Lanka's case, as I said, we have discussed this in our regulation aspects in the previous, prior to starting this topic, we have completed that section of discussion. Broadly, we look at financial system stability. We also mindful of systemic risks, very much prioritize the macroprudential supervision aspects in recent times compared to microprudential supervision aspects practice in the past. But microprudential practices also continues that looks after the institution specific financial risks, institution specific. Macro is system as a whole. What happens to the system, financial intermediaries, or the financial system as a whole when something goes wrong, something happens, or any prospects of economic activities of financial intermediaries concentrating on one type of activity. Let's say real estate activities. They look at it in that way. Okay, so the financial system stability is also one of the very important areas in today's context, because financial systems are so much integrated. And in the US case, it's such integrated to the extent where they are looking not only the health of those financial intermediation in terms of the operations within the US, but beyond the boundaries. And in the case of Sri Lanka, of course, we would see spillovers coming from all these developments elsewhere, but our concentration is very much with respect to the operations within the boundaries of Sri Lanka, not beyond, but overall financial intermediations, balance sheets would be looked very seriously in financial system stability consideration. And the focus all around the world now is very much in line with macroprudential considerations, and microprudential considerations also looked at, but broadly they are looking at not one institution specific. One institution specific, you can do remedies with respect to that, but when it comes to a system-based, systemic considerations, they look at it from a macroprudential perspective. Then they also have another very interesting and important function, supervising and regulating financial institutions and activities. This is to promote safety and soundness of individual financial agencies, financial intermediaries, and through which they look at possible risks to the financial system as a whole. No different in the case of Sri Lanka too. The tools they use on-site, off-site, examinations, then systemic shocks, like you see, you do stress testing and things like that in terms of those agencies' financial conditions, and see what's happening to these agencies. It's very kind of activity. People who engage in supervision and regulation very much aware, and they keep a close eye on even changes in prices, interest rates, exchange rates, what happens to your portfolio, what happens to your balance sheets, whether you incur a significant mark-to-market losses, a lot of things, right? And another very interesting and important function is payment and settlement system safety and efficiency. And today, this is much more enlightened with pandemic circumstances, because people are increasingly wanted to promote and use safe and efficient and accessible system for financial transactions. It's not necessarily physical transactions that they are looking at. This is increasingly you are using systems to make sure your payment and settlement activities carried out efficiently, right? So you probably see national payment platforms, national payment gateways, online payment arrangements. These are fastly expanding and becoming the norm in most of the cases. Even now, we, to great extent, I believe you all also prefers online-based transactions. How secure these systems? How these systems linked with the overall financial system itself? So these are very seriously looked at across the globe in terms of today's financial markets, and they very seriously expand safety and secure arrangements for these. And also from another perspective, today the financial regulators like central banks all around the world, including Sri Lanka, not only promoting the safety of these systems and efficiency of these systems, efficiency in terms of cost involved in the system also being looked at. You use these systems, payment and settlement system, what's the transaction cost? That itself makes people to use these systems against conventional physical payment structures, right? So even ATMs, Now, ATMs be not necessarily promoted in terms of individual financial intermediary ATM. There are a few, but generally common ATM machines. But now again, it expands to the extent touchless because of COVID now. That's fast tracking. And of course, you probably see everybody is cautious that they are mostly using online transactions to that extent. So to say that payment and settlement system efficiency and safety is also another very important functions. The Federal Reserve as well as other central banks, including Central Bank of Sri Lanka, in its activities being considered now. And then promoting consumer protection and community development. This is to make sure the supervision activities, community reinvestment, and research to increase understanding of the impacts of financial services policies and practices on consumers and communities being significantly looked at. And please go to the central bank website and see a particular department was established in 2020. That is consumer protection, financial consumer protection department in the Central Bank of Sri Lanka. Please read that. Why in 2020 we have introduced that? Right? So there are a lot of efforts in terms of minimizing the impacts emanating from crisis, including the pandemic, to certain communities, in the sense certain economic activities in the economy, let's say tourism, let's say other SME type of, there were a number of arrangements being facilitated by the central bank. These arrangements, what central bank facilitated, mainly help these institutions and these communities to withstand some of the challenges that they have gone through, especially during this pandemic and crisis period. Right? Even moratoriums extended. Even yesterday, we presented the roadmap for the next 6 months, where there was a very clear arrangements to say that for the next 6-month period, financial intermediaries being requested to not to go ahead with parat executions that we were discussing. When you do not honor your obligations, the banks have rights to take collateral, and then collateral being disposed, that means sold through expeditious measures. That's one arrangement. And at the same time, the leasing, financing businesses also have elements of seizing of motor vehicles and other related assets. So these being post, P-A-U-S-E-D, post. Okay. So to say that keep it a little more flexibility in operations and give the communities the required space to breathe. They are now coming out from some of the challenging times. Still, it's too early for us to conclude that the pandemic is over. Pandemic is still, the risk is there. We have to adhere to all the health-related guidelines. So to maintain. So the facilitation in terms of consumer protection, financial consumers, is now another facility or the functions all the central banks are prioritizing. So you see the functions referred here with respect to Fed Reserve System is very much engraved and performed by almost all the central banks, including Central Bank of Sri Lanka. And some of the functions, you could say rural development, regional development. Fed Reserve might not be putting it into words like that, but that's also comes within promoting of financial system stability or promoting consumer protection or community development. But in the case of Sri Lanka, those being very clearly identified and carried out in terms of economic stability considerations. Right, the region would not necessarily have same facilities, if not same infrastructure, and the regions would have difficulty to access to finance, right? So these been addressed through regional and rural development activities. These activities also embedded in monetary law act in the case of Sri Lanka. So we will move on, right? Any questions before I move on from this point? Right. So we will continue, and if you have any questions, you can send it either through chat or you can raise it. You can actually unmute, and you can also present it for us to clarify. So to say that some of the functions of these banks, some of these are very conventional. In today's context, we normally not even worry to discuss, because these things are always functions of central banks to a great extent. But now gradually, some of the elements are also diversifying. For instance, the payment and clearing infrastructure. Even in the case of Sri Lanka, you have clearing corporation of Sri Lanka is established. That's very much look after the checks. Checks is instructions on the basis of your accounts. You are basically instructing. It's checks that we write. Is you are giving instructions to your bankers to change, exchange, or pay to whatever instructions you make. So this is also now reducing in importance with the fast expansion of more secured real-time online payment structures, right? So traditionally, the central banks perform, and US, they still perform some of these. You probably see in travelers checks, Thomas Cook travelers checks and things like that. But now these travelers checks are not facilitated in Sri Lanka. This was there in the past, but now no, right? So the countries are moving away from such paper-based structures. Even in US, they are promoting other forms of, but still they have those travelers checks, TCs being facilitated on top of the checks that you instruct your bankers or the financial intermediaries to adhere to. So they do these clearance functions. Currency issuance is always remains one of the key functions of central banks perform, in line with overall money supply and monetary policy, financial and economic stability considerations. So they make sure the currency is being adequately supplied to make economic activities efficiently perform, right? And that's why even in the case of Central Bank of Sri Lanka, you probably see different denominations being introduced at different times, not to address the currencies only being minted, if not printed. No, currencies being there. I mean, it's only kind of released for circulation based on different economic considerations. But at the same time, you see now the focus is not only issuance, but also most of the countries look at clean and safe currencies. And with the pandemics expanding, of course, people would be very mindful of the fact that carrying of currencies also to some extent right? Not necessarily followed like in the past, but then they are very keen to see clean currencies and safe currencies being introduced. And there were a lot of campaigns in the case of Sri Lanka to take out defaced currencies out of circulation. And effectively, that exercise helped not only the central bank of Sri Lanka, but also country, Sri Lanka as a country, kind of increase the country's image in the rest of the world. And we don't see now much defaced currencies in circulation. And if you travel, of course, traveling also to some extent limited and restricted. If you go to certain parts of the world, you don't feel touching those currencies. So that is that much not in good shape, good quality. But now Sri Lanka's case, it's been addressed to great extent. But there may be still few pockets. You probably encourage those people also to kind of use currencies cleanly and safely. So that would be an additional service to the economy and reducing central banks' cost also in kind of a cleaning and then engaging at times with employment of certain people to kind of look into those currency considerations. But issuances of currency is a function of central banks. In the past, of course, they have used private banks also, but now most of the countries very much concentrated in terms of central banks being empowered through legislative enactments to issue currencies. And then, of course, as I said, damaged currency from circulation has been withdrawn, and we also had a very aggressive campaign sometime recently to take out all these damaged ones, and damaged ones being replaced. And of course, in certain countries, for instance, in India, they also withdrew high value currencies from circulation. There were a lot of arguments in favor, against these arrangements. They have taken out high value currencies. That's to kill the black economic activities, if not currencies being hoarded by underworld and other related activities. So that's the one of the purposes of why they wanted to take out high value currencies from circulation, right? So India has done that, a very aggressive campaign. They had this campaign for more than 1 year, if I'm not mistaken, and they have given deadlines at different points of time to take out certain currencies. People have to bring in and then convert them into lower denominated currencies, and they have done so, and through which they have recognized certain elements which were not in the tax bracket and things like that, also brought into the tax net in that country. And also there are exercises in different parts of the world in terms of not like what India did, but then of course taking out all these damaged currencies out of the circulation. And even the people and the financial intermediaries as well as other economic agents encourage to not to accept such currencies in transactions, and that itself motivates people to kind of exchange when currencies are damaged or mutilated. So whatever reasons, they will take out from the circulation. Okay. Then central banks also look at administer and make discount loans to banks. And in the case of US, they talk about districts, Fed Reserve districts. Yes, they have different banking setup, the districts or regional banks, so that covers their operations for the region. national banks, then of course international banks. Most of the national banks are international banks in the case of US. So the Fed Reserve banks operating in 12 different districts, they very much administer and also make discount loans based on the discount rates determined by the Board of Governors at different times and implemented through FOMC. So these being practiced, and in the case of Sri Lanka, you have discount windows. Discount windows in the sense we have open market operations carried out through a specialized department called Domestic Operations Department. They have overnight deposit window as well as overnight lending window. Overnight deposit rate and overnight lending rate being decided by the monetary board at different intervals. Recently, the rates been increased by 50 basis points to 5 and 6, from 4.5 and 5.5. Right? So you can read the recent monetary policy announcement that explains some of these details. And what I'm simply saying is, so they have these windows. They can come. The banks can come and park. Park means deposit the excess money they have with them every evening and get a 5% interest rate from the central bank for those deposits. So you can see, effectively speaking, banks should be able to pay more than 5% for the deposits that they keep. But I don't see banks are paying 5% for their depositors. It's less than 5% from one perspective. Maybe they cover other costs, things, everything. But they loan most of these deposits at high rates. So that's the challenge. I mean, we have to gradually make sure the banks also pay adequate return to depositors, because central bank facilitates. If you don't have those deposits being channeled for other economic activities, still you can come and keep with the central bank and get a kind of a overnight rate, right? Similarly, they can borrow overnight lending window at 6% now. These 5%, 6% rates changes periodically. That's why I said it was 4.5 and 5.5 up until September. Not September, it is October. Hey, it's not October. It's August 18th. From 19th, there was a change, right? So you see this change in terms of the overnight deposit and lending. Lending, they can come to the central bank and borrow from the central bank at 6% now. For that, you have to collateralize. You have to give collaterals to the central bank, mainly the government securities. You have to pledge government securities and borrow their financing requirements overnight. That means for a single day, tomorrow you have to settle it. But most of the banks borrow today, settle tomorrow, borrow tomorrow, settle day after. It's continuous based on their cash flow positions. But if you are effectively running a treasury, you can minimize such things. And central banks also mindful when they see overall market is short, that means liquidity is negative, right? So they not only lend overnight, but they also lend term. Term means for a longer duration, not for one day. So they provide these facilities, and that's how Central Bank of Sri Lanka operates. But discount loans, apart from these facilities presented by the central bank, Fed Reserve also same, Central Bank of Sri Lanka also same, most of the other central banks also same. They have specialized schemes for banks to borrow discount loans from the central bank. Banks access these discount loans, lender of last resort kind, when they don't have access to other form of finances from the market. So they mostly come to the open market operations window and borrow. It's a very normal thing, and they have securities. But then Other forms, lender of last resorts, are little more severe in the sense rates would be higher. Then you are under very serious supervision because you have not managed your portfolios right. So that's why you have come to discount some of the assets that you have with you. And even sometimes, even without assets, at the assets, central banks could lend on a distress loan basis. So these are possibilities, right? And these functions being carried out by central banks all around the world, including Fed Reserve. And then, of course, they look at mergers proposals. They merge with some other financial intermediaries or some other agencies. And expansion of activities. These are very common. And sometimes the mergers and consolidations are policy-based proposals. Sometimes they promote, central banks promote in line with overall financial market efficiency and systemic supervisory considerations. They promote mergers, they promote consolidations. They don't want to see thousands of small tiny financial intermediaries exist because that makes financial intermediation cost high. You don't get economies of efficiency, right? So that means scale benefits, economies of scale benefits, right? So you see simply these being promoted as policies as well as these being practiced across countries based on their financial market priorities at different times. Okay, so then they act as liaisons between business community and the financial intermediary or the financial regulator. And the central banks act in this way in many forms, even engaging with these agencies to communicate the priorities. And in the case of Central Bank of Sri Lanka, you see there we have consultative committees. In the case of Fed Reserve, you have advisory councils, and then of course regular interaction with stakeholders. So we have consultative committees, monetary policy consultative committee, financial system stability consultative committee. So these consultative committees bring in a lot of experts from different perspectives, and these people exchange their views, and that exchange of views are helpful in kind of coming at collaborative decisions and to see how best some of those concerns been addressed. But unfortunately, countries like Sri Lanka, when these experts, so-called experts, sits and they try to speak, they speak their own problems, not that industry or the financial intermediary or the community. No, they mostly talk about their own problems. If they have something, they try to kind of, present it as their communities, if not the industry's concerns. So that's unfortunate, but most of the advanced economies, they don't have such problems. They represent in terms of the overall system consideration in discussions. Then the examination of holding companies and other member banks. Very much state chartered, that means state within the region or the Federal Reserve districts, there are certain type of financial intermediaries. They are not chartered by Federal Reserve system itself, but that central bank, Federal Bank for that region being given clearances, or other state affiliated agencies being approved. So their operations are very much limited to that region. In the case of US, so there are books being examined, there are holding companies being examined, because ultimately the financial intermediaries' health is very important in terms of weaving all these aspects into the equation. Then the information, data dissemination, also get information from business conditions prevailing in the market. Those are very important. So to say appropriate policy means policies being introduced. Right? So to say certainly standards of information dissemination not only their own rights, but also in the global platforms. It also shows a country's maturity and the level of information efficiency. For instance, if you look at Sri Lanka, Sri Lanka is now in the IMF, International Monetary Fund, data collection and information dissemination exercise, STDS country, SDDS country, Special Data Dissemination Standard country, right? So we have graduated to STDS from GDDS, General Data Dissemination Standards. So general data dissemination has certain weaknesses, but we have now advanced to STDS, Special Data Dissemination. So we have obligation on our part, certain type of economic information being shared within a very limited time duration. You can't be keeping its ages after completion of a financial year. No. You have to have a very specific timelines. You have to update that information, and also that information in required standards and formats. Then only you can compare. The compilation of data and information in Sri Lanka is very much advanced now. And even if you go to Central Bank of Sri Lanka's website, so these informations can be accessed very in a very methodological basis for any purposes. But sometimes people are mindful to kind of see the information in the format they wanted to, let's say, do a research. But they don't try to extract the information that's available in the general format and try to kind of convert them to the specialized formats they require. They don't want to spend little time on those data cleaning and kind of a data arranging exercise. They try to get that also done by the central bank. Send requests from us, request to us to kind of get type of information. So we generally kind of direct them as a economic research database, economic research data library. So you can do and classify them and access information in the case of Central Bank of Sri Lanka's website. So similarly, the other central banks, including Fed Reserve, do this aggressively. So different part of US, they collect these information and pool them, analyze them, and present them in decision-making process, and as well as disseminate them for general public's consumption. And even in the case of Sri Lanka, some information collections happens to regions. We have regional officers. Those informations being fed into the systems that we have in terms of certain decision making. And then all the central banks in the world, they employ professionals, mainly the economists, and they present research topics related to conduct of their monetary policy and other related legislative empowerments, right? So it's not only monetary policy related, but financial system policy, macroeconomic considerations. And anyway, I mean, you can then feed these things to monetary policy, conduct of monetary policy related considerations. So that's very common, and that's practiced by all the countries in the world. Right. Any questions? Okay. So another important consideration in terms of Fed Reserve banks and monetary policy aspects being looked at, or central banks and monetary policy aspect is looked at. So-called, in the case of Fed Reserve, the board of directors established these discount rates, the rate at which they facilitate discount lending. Right? So in the case of Central Bank of Sri Lanka, rate at which open market overnight deposit and lending rates being decided by the monetary board. Okay, and then generally these discount rates and discount loans can be obtained by all the financial intermediaries who has accounts with the central bank. But then US case, apart from such arrangements, generalized arrangements, they could be very specific. Discount loans can be accessed by this type of financial intermediaries. Let's say only state affiliated financial intermediaries, not nationwide financial intermediaries or internationally expanded financial intermediaries. They could bring that type of rules to the system. Even in Central Bank of Sri Lanka's case, yes, they can bring in, but normally it's general for. But discount rates, discount loans being accessed by financial intermediaries and the rates being determined by the monetary board or the board of directors in the case of Fed Reserve banks, to some extent signals that you are not doing your treasury operations properly. That's why you are having difficulties and discount your assets and access the discount windows. But open market operation standing windows is not something that's been looked as they are not managing. But if they continuously access, yes. There are some banks in the case of Sri Lanka, they are continuously borrow from central banks overnight lending window. Then the regulatory departments go into those banks and figure it out why. Whether such borrowing behavior is due to a systemic weakness in the bank itself or a macroprudential. They look at those aspects, they analyze to come to conclusions. It's very important. Okay, so in the case of Fed Reserve, again some specialized arrangements. So the board of directors select one commercial banker from each district. You know, there's a Federal Advisory Council, okay, which consults with the board of governors that provides information to help conduct monetary policy. And these decisions, rates, loans, whom can be obtained, these being fed to the board of governors through Federal Advisory Council in the case of US. So to bring in those elements, sometimes you see different states in US specialize in different economic activities. Some are very much large-scale agriculture producing centers, corn, wheat. Some are main producers of iron or whatever, all these materials. Some are producers of fossil fuel, right? So those activities could have challenging times based on natural considerations, as well as even sometimes the labor shortages, right? And for instance, now you probably seen in UK, there's this truck drivers to distribute oil, distribute basic food. There's a big demand, right? So to say that these industries have difficult times due to various reasons. So they have to manage them. So they have established certain standards. So then these advisory councils bring those into the attention of the decision-making board of governors, and then those facts being evaluated, reviewed, and established in terms of what type of institutions can access and how the discount rate being empowered. Okay. So to say that these operations are kind of decided on the basis of information on the ground. in the case of US. And you also know the composition. FOMC has 12 members, 7 members of the board of governors, plus 5 presidents of Fed Reserve banks. You have 12 Fed Reserve banks. New York Fed Reserve Bank president is always a member of FOMC, and 4 other from other 11 Fed Reserve banks take turns to become members of the FOMC. Okay, so you see the establishment and the practices in the case of US, and also comparing with the Central Bank of Sri Lanka and other central banks from a broader perspective. Then you also know in the case of US, the member banks exist. So the banks in that region are the members of their central bank. Right? So naturally, all national banks, the banks which have borders beyond the regions, are members of the Fed Reserve System. Right? But the state chartered commercial banks are not forced, they're not required, but they can become members. They have the choice. They can become members, and then they could actually influence some of their considerations and engage in decision-making process. But usually, my understanding from various literature, the commercial banks chartered by states are also opting to be members all the time, because that has its benefits. They can carry their message across efficiently into the Federal Advisory Council, and then through which to the policy decision-making process. Then there were efforts in terms of some deregulation and controls being introduced to make sure that across the banking sector, reserve requirements, reserve requirement is another tool central banks use. In Sri Lanka, we call it statutory reserve requirement. Effective 1st of September this year, the statutory reserve requirement in Sri Lanka was raised by 2 percentage points, from 2 to 4%. So each 100 rupees that you accept as deposits, you have to keep 4 rupees with the central bank. If it is 2%, it's 2 rupees. Right? So similarly, the other countries also have different reserve requirements. These reserve requirements as member banks, when you have these reserves being maintained with Fed Reserve banks, you have access to facilities extended by the Fed Reserve banks. In the case of US, in Sri Lanka, all the banks are required to, and they are having all the facilities extended by the Central Bank of Sri Lanka, including open market operations windows, standing windows, discount lending, lender of last resort, penal lending. They get supervision being carried out without any fee. But remember, these reserves that they maintain with the Fed Reserve or the central banks in other parts of the world, including Sri Lanka, non-remunerated. You don't pay a return for such deposits. Non-remunerated. At different times, yes, you could introduce a remunerated reserve requirement. You have standard, let's say 4%. Additional 2% being encouraged, and give them for that additional 2% some attractive return to reduce money supply, let's say. So that's policy, target different. But during financial crisis in Europe, there were some efforts to introduce remunerated reserves also. but those remuneration were very limited, if not very small. Right? So these are some of the developments that you see across these arrangements. And very interestingly, the composition of Board of Governors of Fed Reserve System is very much something that you have to understand, because the way in which those the key policy making body in the case of Fed Reserve System that basically influence across the world all the financial markets and financial market operations. And you already know there are 7 members in Board of Governors, right? They are headquartered in Washington. Despite all these Federal Reserve banks operating in different parts of US, these 7 members headquartered in Washington. In the case of Sri Lanka, we have a 5-member monetary board. And other countries, they have very specific policy making bodies, boards, but the number of members differs based on their arrangements. And I believe ECB, European Central Bank, will come to that. They have 12 members, right? And these members in Board of Governors are appointed by the President, US President, and confirmed by the Senate Parliament. And they have a 14-year non-renewable term. Once appointed, they can go for 14 years. There would not be a second term being offered. And look at this 14-year term itself. In US, a presidential authority runs for only 4 years. A Senate or Congress, once appointed, it's 4 years. So effectively, more than 3 terms of 3 governments could run at most, but maybe much more frequent if they have more frequently changed due to various other reasons. So to say that policy consistency and once you appointed there, removing from this boards is very challenging, difficult, unless you voluntarily resign. So to say that you don't prioritize political priorities, but you prioritize policy requirements of the US economy and the financial system. So having much more independence in this sense to the members of the Board of Governors. And in the case of Sri Lanka, term is 6 years. It's renewable, not like US 14-year non-renewable. Here it is 6-year terms. Once appointed, you have 6 years. Or if you've been appointed to fill a duration vacant by somebody resigning prior to completion of 6 years, first you have to serve that remaining period and then look at a possibility of appointment or not. That's the monetary board members. The governor's usual term also a 6 year. But first he has to fill the duration of a governor who resigned prior to completion of his full 6-year term. Right? So you first set this duration into the consideration itself. In the case of Sri Lanka, the presidential term was originally 6 years, but that has been brought down to 5 years with 19th Amendment to the Constitution, if I'm not mistaken. Yeah. And the parliamentary term also brought down to 5 years. Right? So 6 years is reasonably a reasonable duration. But the thing is, in Sri Lanka, often with the changes happening to the government, members also being either asked or forced to resign. So they resign because they don't feel welcome in the board, so they probably not necessarily stay highly respected people. So to say that the independence of these boards are very important consideration in defining durations and appointments. That itself gives you some understanding that the decision making, policy making in central bank highest levels of authority has to be very much independent and rational. And in the case of US, the 7 members require to be represented by different Fed Reserve districts, not concentrated to one particular district line. So in Sri Lanka, that doesn't arise because we don't have different Fed Reserve banks. We don't have different central banks in Sri Lanka. So in US, it's 12 central banks pooled to a single board of governors of Fed Reserve System. And that's the kind of a key decision-making point with respect to board of the Fed Reserve Bank's activities in US. And the chairman, who's the governor in the case of Central Bank of Sri Lanka and other countries, is chosen from the board of governors, and they serve for a 4-year term. You've been appointed as a board of governor first, and through within that board of governors, one being chosen as a chairman, often with the backing of the highest level of policy making in any governments. So you've been seeing various people at different point in time in US, and some, of course, working across different presidential terms. For instance, Professor Ben Bernanke was working under President Bush and then with President Obama. And then you probably seen after Professor Ben Bernanke, Janet Yellen, a lady, now she's the Secretary to the Treasury in the US. And now the Jerome Powell. I mean, these are the figures that chairing the US Fed Reserve System, and they act as chairmen. And they see the term, appointment, and duration of serving as members of the Board of Governors as well as chairmen is very interesting in terms of how best they can perform their duties independently. Then these members of Board of Governors, they votes. They have votes in conducting an open market operation, but interestingly, most of the time, what we simply see is consensus-based decisions being arrived. They don't try to go into votes, but they can do. 7 members majority decision, they can arrive. But often, even in the case of Monetary Board of the Central Bank of Sri Lanka, they don't go to vote, but mostly the consensus. They factor the views of all the members and try to come to a common ground and introduce, if not everybody agrees. Then they set reserve requirement. I said it's 4% from September 4th, September 1st in Sri Lanka, from 2%. Previously, it was much higher, something like 10% in the past. Right? So there are various possibilities in the exercise.
Excuse me, sir.
Yeah.
Is there any qualification to nominate as a member in US or in Sri Lanka?
That's a very interesting question. but unfortunately, the law doesn't specify qualifications. Right?
In US also?
In US also there is no specification as qualifications, but you can see uh, you have to be mindful of the fact that they have to represent different segments of the economic activities, and those economic activities that they represent, they have to have the expertise for sure, otherwise they can't represent. They don't say that you should have a PhD, you should have a master's, you should have a first degree. There is no spelling as such. But between lines, it's very clear they have to have the expertise in the field of engagement. For instance, money and banking. And that's why I said when it comes to Professor Ben Bernanke, he was the professor in economics, basically monetary economics at what is the university? Oh, that's not coming to me straight away. It's not Harvard. Yes, one of the top universities in US, and they are very much established. For instance, Raghuram Rajan recently resigned Reserve Bank of India governor. Right? He's a professor in economics and world renowned, but he resigned due to differences of opinion with respect to the Indian government after some time. And also he talks about independence of Reserve Bank of India and the influence of Minister of Finance, and then that's prompted. I mean, these are possibilities, but generally there is no black and white specification of qualifications, but expected to have highly respected, highly regarded individuals to be appointed as members of the Board of Governors in the case of US, as well as in the case of monetary board, in the essence of functions being deferred therein. Right? So often, I mean, what we simply see is most of the members who comes in, anyway, you can't become a secretary to a treasury if you can't become a secretary to a ministry. Right? In the case of Central Bank of Sri Lanka, the secretary to the Ministry of Finance, a member of the monetary board. So to say a general direction of becoming a secretary, you should at least have the administrative service. Administrative service, you have to have basic requirements, right? But it doesn't mean that the president can appoint secretaries outside the administrative service. He can appoint anybody. So then he can become a member straight away in the monetary board. But it's essentially that setup itself guides some guidance in terms of standards required of a monetary board member or a board of governor in the case of US, because you find in the US Federal Open Market Committee discussions minutes being published. We do not publish by comments by members, but generally the minutes or the monetary policy review being published in the case of Sri Lanka, not by discussions, but overall the decisions arrived and how what factors we looked at, all being kind of listed out. But in US, apart from general decisions, specific discussion points of members also published. So anybody who act fool get revealed, and there's a bigger lobby in US. They probably chase such irrelevant, if not non-matched in the board. So that's possible. So that's the kind of systems exist in those. They do not put, they have to have a PhD. No, I don't see, I have not read anything like that. But between lines, yes, they expect them to have substantive expertise in the fields that they represent. Okay, so they set reserve requirements. Apart from that, they control discount rate. Yes, they define what's the discount rate to be. And I said again, they apply a mechanism called review and determination to control these discount rate, how effective these discount rates. And they facilitate this discount rate being channeled to the economic agents. For instance, if it is a particular Fed Reserve district where the damage due to natural disasters or whatever is significant for agricultural related produce, they probably facilitate such agriculture-based production in that particular region through special compensations. They lower the collateral requirement. Even when you discount the financial assets, you price it through a structure. That pricing structure, they could kind of a shape differently. Similarly, the margin requirements. Okay, you have to have a certain amount of deposits as margins when you access certain financial instruments, financial assets. The board of governors define these things. They can relax these, they can increase these, they can completely take away the margins. Even for imports, they can set margins. Right? So through this type of exercises, they more or less look at the economic circumstances, how best they could facilitate in achieving the set objectives of those agencies. And then the salaries, appointments, the budgeting, this is like any other institution. I don't want to get into this. So these are decisions they decide, they arrive at based on whatever the circumstances. And they also look at final decision in terms of consolidations, mergers, new business activities. Of course, the inputs being called from specialized staff. There's expertise within all these agencies. So they look at the inputs from these parties and they allow so-called permissions to a type of holding company activities. Of course, there were circumstances, particularly during financial crisis, some financial intermediaries were permitted to have holding companies in terms of other related economic activities, including sometimes the motor vehicles, a different type of trades, because those agencies were having very challenging times and some infusion of finances required. So they have allowed different type of economic activities to be brought in under the financial intermediaries. And then all the boards all around the world in terms of central banks, they look after the operations of foreign banks operating in their jurisdiction. Foreign banks operating in US, for instance, all the European banks, all the Asian banks, Chinese, Japanese, they're operating in Middle Eastern banks operating in US territory. They look at and supervise the activities and set certain standards, requirements, right? Permissions to engage in type of activities. And now beyond the financial supervision, they also look at all these money laundering, counterfeit financing, terrorism related financing, all kind of activities that also comes into the focus. The central banks or specialized financial arrangements, financial monitoring arrangements. Now, for instance, in Sri Lanka, you have a financial intelligence unit. They look at some of these activities, right? So, based on these, the Board of Governors ultimately drive their decisions, and the person who vested with most of these being on his shoulder and act as the go between stakeholders and the decision making board is the chairman. In the case of Sri Lanka, governor of the central bank. And they actually engage with the head of the government in terms of president on economic policies, and periodically testifies in the Congress or the Senate, and often speaks and have dialogue directly with the media in terms of communicating the Fed Reserve's decisions. And there's no difference when I say Fed Reserves or central banks here. All the countries, all these activities are carried out by the head of their monetary authority, central bank or monetary authorities, reserve banks. It's very common. And also they represent the US negotiation with rest of the world, particularly on economic matters. And even in the case of Sri Lanka, the governor of the central bank engage in engagement with rest of the world, not only in economic matters. Probably you might have seen in the past when there were peace summit negotiation, the governor of the central bank also a member of the Sri Lankan negotiating team. So these are possibilities, right? So the engagement on that basis. But interestingly, FOMC, Federal Open Market Committee, or in the case of Sri Lanka, it is you can call it a monetary policy committee, but monetary policy committee does not have the powers as such of FOMC. Monetary policy committee could propose and take those decision to the monetary board, and ultimately it's a monetary board. Even if monetary policy committee says the monetary board thinks differently, they would act upon it. But there were efforts to change the monetary law in the case of Sri Lanka with amendments where they have actually brought in some powers to the monetary policy committee, but that didn't go through. That was not taken or listed for whatever reasons. So these FOMCs, they meet for a timeline that is published and publicly known in the websites of Fed Reserve. A Federal Open Market Committee meets 8 times a year, 1.5 a month apart under normal circumstances, but this does not mean they can't meet more frequently. No, they can meet at any time based on economic development and economic circumstances. And even in the case of Central Bank of Sri Lanka, the monetary board can meet any time, but monetary policy reviews are listed based on an advanced monetary policy release timeline, and that usually about 8 times. You can see monetary policy reviews. Next monetary policy review in the case of Sri Lanka is due on 14th of October. Monetary board meeting is due on 13th, 14th morning. the monetary policy review been announced at 7:30 a.m. and followed by a press conference on the same morning. So you see the arrangements. This been announced in advance for the markets to understand, and these policy making bodies, the monetary board or for that matter FOMC, would discuss greater details, and markets should not expect ad hoc changes. They can all of a sudden tomorrow morning when you get up you see, oh, policy rates being changed. No, they can expect a timeline in which the changes being looked at. Right? So you see that certainty, but as I said, this does not prevent these committees to sit more frequently and make decisions. If a requirement arises, they could call up immediate discussion and they could arrive at different decisions when it comes to financial stresses, difficulties that you see and come across often across the world. This is same with other central banks, monetary authorities in the world. And in the case of FOMC in the US, as I said, 12 members, 7 members of Board of Governors, plus 5 presidents of Fed Reserve Bank. New York is always a member, and other 4 Fed Reserve Banks presidents, they take turns. And why New York? New York is the center of world financial markets. So the open market desk of New York Fed Reserve is the most active open market desk throughout the world. And they make decisions of trillions of dollars every day and implement them. Okay, so the chairman of the Fed Reserve or the Board of Governors also chairs the FOMC, and often the decisions arrived at FOMC is directed to the Fed Reserve Bank New York trading desk. They initiate, and then that transferred into other Fed Reserve Banks trading desks in respective regions. It's very much simultaneous, but what the New York does is spill out to the entire financial world simultaneously. Any questions?
That US members appointed by the president.
Yes, yes. All 7 members, right? All 7 members of Board of Governors are appointed by the president when it comes to US. And the 5 presidents of respective Fed Reserve Banks, they've been members of FOMC, is actually nominated to Board of Governors and vetted by the Senate and the President. Okay, so it's a 12-member body, FOMC. So to say that Board of Governors are members, Board of Governors are appointed by the President with the concurrence of the Senate in US. And the presidents of the respective Fed Reserve Banks, right? They've been appointed by the Board of Governors effectively, but with the concurrence of the Senate and the President to great extent in the US case. But in Sri Lanka's case, there is no requirement as there is no different FOMC. MPC is an internal setup, right? So the Monetary Policy Committee and the Monetary Policy Consultative Committee, that is set up based on the requirements that specified for consultation, and the members being appointed by the Monetary Board, the governor in the concurrence of the Monetary Board. So that's a different setup in Sri Lanka. But what you are simply seeing is the Fed Open Market Operations Committee is very, very influential, and the 12 members engaged there are quite reputed, as well as in terms of the expertise and their engagement with the rest of the financial world. And the meetings of this FOMC that conducts on the basis of the meeting cycles already engaged, but they get feedback from line managers on a regular basis on open market operations, and these are very much related financial market issues and considerations, not only to the US but also to the rest of the world, and also look at overall national economic considerations. They look at the US overall economic direction and forecast, rest of the world's, okay, and scenarios being presented, what shocks, what happens to interest rates, exchange rate, collapse in trade, boom in trade, boom in asset prices, right? Financial flows to US, financial outflows from US, strengthening of US currency, then possible actions by rest of the world. Similarly, they also periodically brief and present to the US Congress. And also, if the Congress or the Senate passes laws or certain directions that's been how best been practiced and adhered, they look into those stuff. And then public announcement. Communication is very important in today's central banking. You have to announce, communicate, and effectively communicate to bring in desired outcomes. Then the role of chairman or the governors in the case of central banks, and often they really run the show, so they should have certain elements of public speaking, personality, all matters, right? So they act as spokesperson for the central bank. In the case of US, it's Fed, and also negotiates with president and the Congress for different policy decisions, and also decide what's the agenda for the discussion, the Board of Governors discussions, and sets the agenda for the meeting, or for that matter, he sets the plan for the discussion, what to be taken up first, what to be prioritized. That itself an important role and requirement in the terms of voting, often being avoided by most of these Board of Governors as well as the Monetary Board in the case of Sri Lanka. So what happens here is they often express their observations first, and also votes if a requirement arises, simply because they see based on their observation and voting, the other members also could kind of define some of their responses. So he might lead. He might also communicate if there are specific instructions or directions received through various other policy authorities. So they would look at it from that perspective, but this does not necessarily prevent other members independently define their direction. And also the supervisors, the overall the professional staff of these institutions, as well as advisors at different times by the chairman, because activities been envisaged in terms of performing certain directions, certain economic activities envisaged for the purposes of those agencies, as well as the overall achievement of objectives set upon. And this is not different in other central banks too. And there's another very important point that we are now coming at. This is the independence of these agencies. Some may argue central banks and financial intermediaries requires independence. Some still favor they have to act within overall mandate of governments. But in the end of the day, most central banks and most literature favors that the central banks to be independent. And central banks' directions or the actions has to be beyond the boundaries of a duration of a government. Government could be for 5 years, could be for 10 years, depends on how they get the mandate from people. But the central banks should exist beyond that particular government's duration. So when we look at this independence, you talk about so-called goal and instrument independence. Often central banks have so-called instrument independence. That means what type of instrument or tool that you can use in achieving the set goals. But the goals being set by the legislature, ultimately the parliament or the senate. But once set, right, how these been amended change itself would also give independence to the central banks operating all around the world. That is also a very important yardstick, the independence being evaluated. Sometimes changing of important legislations like central banks acts requires 2/3. In some countries they have such specification, but not in Sri Lanka, not in US. They can change with simple majority, right? But they don't come and change frequently. That's a different call. Because broadly, the objectives set for central banks cannot be achieved overnight. These are long-term, and actions you take would not immediately yield results. That requires lead times. So the instrument and goal independence of central banks look very important in deciding what, after all, the ultimate objectives that these institutions tries to achieve. This is a very important area, and I repeatedly say that most central banks favor independence, and most countries who succeeded in their economic drive had independence in terms of the central banks operating in those economies. So this has a reasonably lengthy discussions in terms of how we can swim into this topic. So we'll come back to this point in our next lecture. next class. That's again at 7 o'clock. I prefer 7 o'clock slot because that keeps a little bit of free time in the case I require to attend to some of my official engagements. And please keep your colleagues also informed. We start 7 o'clock in the morning and we'll finish as usual, 7 to 9 window. That would be great. And if you don't have any questions, any further clarification, I stop at this point and see whether you have any other considerations or clarifications required. So we'll stop at this point and we will come back and start with central bank independence, and then we will see how we have to discuss. If you have questions, you can raise it. If not, you can put it in chat box.
One more question at last. Who is deciding, who is creating the roadmap, by the governor or the monetary board, sir?
In fact, roadmap is prepared by the professional staff, and broader guidelines for that comes with governors' inputs as well as monetary board's inputs. And also, once it's been very much cleared, that also goes back to the monetary board before presenting. So it is mainly the more or less experts' observations being brought in all throughout, but the policy direction coming from a governor and the monetary board. Okay. Thank you. And
Thank you.
Yeah. If there are no further questions, we'll stop at this point. Stay safe, and we'll meet next week. Thank you.
Thank you, sir.